Today is Thursday. It's February 6th, and it's early morning in New York. It's almost afternoon in Europe, and we're all waiting for a couple of central banks. And there's a bunch of stuff happening in emerging markets. So we have Sebastian Galy from Societe Generale. He's a well-renowned analyst, and well, you can introduce yourself, really.
Sure, I'm Sebastian Galy. I'm based in New York, working for Societe Generale, covering the FX space, and I guess some of the global stories behind it. And I guess I've been in the business for a bit, having a bit of fun. Have a mixed academic, professional background, and work for both buy side, sell side, and the central bank business. And I do a lot of work in general for central banks. Definitely try to do some decent work, as well as the usual array of clientele.
Yeah, so you work for central banks as well. You rent it out?
That is true. That is part of my core area of trying to work with that clientele for different reasons. So one is to increase the flow. Number two, they are our regulators to any extent, and therefore it's always good to do a good job for them. And the central banks, as well as treasuries in general, have a heavy capability to monitor markets. That's part of the function, to try to make sure that they get as much information and warning about possible issues.
Can you give an example of what kind of work you do for them? I mean, do you do like analysis? Or
Bitcoin is not really a currency that you would actually want to necessarily trade as a product, given many of the issues. If you're potentially a bank. However, if you're a regulator, it's an interesting development. It's interesting for two different reasons. One, if you look at it from a regulatory point of view, there are issues related to it, related to confidentiality, the ability to tax, and the way it was set up, which is essentially to profit from the people who originally distribute the product, and then it more or less, not necessarily at the expense of the people who follow it, but essentially they make lower marginal gains until basically the demand is filled, and then you get a very significant correction in the market. So it's a private money, and that type of private money is something we've seen in the past. So if you can get in early on that kind of process, it might be interesting for many central banks, and you've seen them react pretty aggressively. Some of them were ahead of the curve, and of course we're quite aware of things. So, and some of them may not have been, so it's very difficult to tell because they wouldn't tell you. And then on the second side of that aspect is the monetary aspect of it. Bitcoins do indicate a certain fringe of the market has a certain behavior regarding expected inflation, and they're behaving in a certain way. Also, if you look at it from the point of view of behaviorals, it's very interesting to see how a market evolves and basically tries to create its own banks, its own PR systems, and it's essentially a very, very accelerated version of a little financial markets that goes from a very initial base, which is a very innovative type of thinking, and goes to the process of create barons, or banks, which cannot lend by themselves, but are the holders of the original money which is issued. And then the process of acceleration that involves a significant amount of PR, which is basically development of a new product, to make sure that other people are aware of it, so that there's demand coming in, which then will support your incoming price. And then, of course,
no, but let me just get this straight. I don't mean to cut you off because it's very interesting, but so you advise someone like, let's say, theoretically the Fed or Bank of Canada or ECB or someone like that on issues relating to something as fringe as Bitcoin?
Advice is the wrong word for it. What you do is you basically inform, and so you inform the stuff, and if the topic is interesting because it's something which they might not have spotted, or it has added value from their point of view, the regulatory or monetary side, then that's part of the business. It really has no core function from the point of view of a bank, and it's part of the normal spectrum of stuff to expectations regarding interest rates, path of currencies, valuation models, and the like. So there's a full array of stuff to keep the central banking community involved. And of course, if you could be ahead of the curve on things which come a little bit off the radar screen, then it's also more added value and differentiation relative, let's say, to our competition.
So how? Because one of the things we're completely off topic already. I'm just so interested in. I did not know this about you before. So one of the key concerns about Bitcoin, at least a few months ago, was it's just going to be shut down because the government wants to have a monopoly on money, and they want to keep that, and they don't want to risk anyone just getting in the way of one of the most important parts of the economy. But you've been on the other side of that coin, helping them realize maybe that this is a good testing bed. Is that a fair assessment, or like a monetary testing bed?
Well, the problem with talking with the central bank is they listen tremendously and they rarely talk to you. It's a very one-way process, and when they do talk back, it never happened. So there are things which should never happen, and there are very few of them. So that would be the way to phrase it. So if you look at the Bitcoin stuff, yeah, I think as much as a comment I got back from the central bank is that's interesting. Nobody's going to show their hands. Now, you can speculate as why they find things interesting, because I would find it interesting if I was in their business, and I come from a central banking family, so I do understand what these guys are probably aware of it. It is a French subject, but it's a fascinating one because it has so many aspects to it. And I think it has a tremendous interest if you're an academic, because it does indicate a lot of the behavioral biases that we have. The way a system propagates a product is developed, and the evolution of financial markets. We already had attempts at securitization, which is basically, one way to say it is basically put these bitcoins in some kind of funds and trying to sell them away. Eventually somebody will try to leverage, and of course what we saw, I think you're highly aware of it, is the development of parallel coinage to the Bitcoin. So already you have clone type of products which come in and try to take advantage of this valuation effect. So it's behind it, of course, is innovation, and behind it is some of the inner greeds that expresses itself. And some of it is a function of the fact that there are no good alternatives because interest rates are very low. So it is a symptom of our current situation. It's always very important
Yeah.
to listen to anomalies in the system. And
Wow.
the Bitcoin is a significant anomaly.
So if you're going to speculate, I mean, I don't want you to risk your whatever engagement you have with whatever central bank you're talking to, but do you think that it's unreasonable to? I mean, by the way, we're off topic. I'm sorry, but this was more interesting than ECB, to be honest. So, do you think that that central banks use something like Bitcoin to, let's say, test to go back on the gold standard, or test some kind of regulated system, like or deregulated financial system, or do you think that they're watching this in a much more sort of serious way than one would maybe naturally assume?
Well, the central banking is made up of a lot of academics and very intelligent people, so they try to extract information where there's information to be extracted. Now, I don't think they're really concerned in any way, shape, or form by Bitcoins themselves as a product, because they know these things. It's not the first time we've had these products come out. They've been coming out for centuries. They already exist. If you go to arrive in Munich and land in the Bahnhof station, which is a train station, and you'll find out that some guy is trying to pander some form of quiet money over there. So these things do exist.
Or Argentina?
So what exactly? So what's interesting is really some of the aspects of it. The payment system, I think, is very important. Something which is probably underestimated. I could see the FT that they put out a piece on it. I think I wrote an article for a LATAM piece about 3 weeks ago on this. But the payment system is probably the most interesting bit, and you've already seen similarities in the banking system being developed as they improve the way we transact. So that's really probably the vital development for the Bitcoin space as a technological improvement. Then there are other aspects which are not necessarily linked to monetary policy, but they are an indication of something going on slightly altered. The economists would probably focus on expectations of inflation and the like. They still stay in the normal parameters,
Yeah.
but it does tell you then that there's something slightly off with a certain part of the fringe. And people listen to tulip bubbles the same as they'll listen to Bitcoins and the like. So there's information to be gathered by people willing to listen to it. Are they concerned about returning to the gold standard? The answer is absolutely not. I would presume. And so I'm not too concerned about that. And then, of course, there are other people within central banks who are also on the regulatory side, such as the treasuries. And these guys have similar functions in terms of the control of the markets, supervisions, and in their jobs. And their view both on the payment systems and other aspects of these products, legal issues and the likes are very well developed. And what we saw is that they're already, in some cases, quite ahead of the curve before, it hit the newspapers.
Yeah.
I'll give a lot of kudos to you and other guys in the business on the in that you guys were ahead of the by far sell side or buy side analysts on this subject.
Is this something people talk about? Because it's a very, for lack of a better word, sexy topic. I mean, the fact that we're getting into it, and so why I find this interesting is because you know that the fringe is talking about this, and I guess it all started with the people who eventually got sort of dubbed as the zero hedge crew, where you have this like propensity towards gold, hard assets, and everyone's appears to be afraid of hyperinflation and all these things, and that sort of that died. Bitcoin replaced it somehow weirdly with this completely oddball solution. And do you think that that they even might like something like this because it takes the pressure off them and it takes the pressure off this like the central banks?
So there's always a fringe which has some difficulties with the current economic cycle, which is one where inflation is actually very low, debt loads are high, we have essentially compression and productivity, or a need for it to increase productivity globally, cost cut, because a lot of people around the world are very expensive. Norway being the prime example of the central bank eventually reacting to it. Now, if you look at why Bitcoin is attractive, it's attractive for several reasons. One is the price rose, therefore it attracts a herd mentality. If it involves a herd, then of course there's a certain amount of PR which goes in parallel to it. So it becomes a very attractive PR subject, and that's part of the game in such a scheme. Now, if you look at the way the Bitcoins originally started to explode, and I had a lot of fun at this time because I was really there at the beginning of the process, is some friends who were basically in trading, systematic trading and the likes, recognized that without giving their names, that the system was inefficient in Bitcoins. The system was inefficient because the supply was released in a certain almost deterministic way, and the demand could be forecasted because you knew the number of accounts which came in. Add some PR, and then of course the number of accounts will rise. Because you know that the demand is incoming and the supply is inelastic, the strategy was essentially to try to buy the Bitcoins ahead of the release of the data and then essentially sell them on expectations of that release. And that process meant that eventually the market realized that this was a set up to be a tulip, and therefore started to trade it as a tulip. So professionals have been involved in that explosion because they understood that the market was built with a major flaw in it, and that flaw is what was exploited very, very professionally.
So it's reached some kind of equilibrium now, I guess. So in terms of being a method of exchange, it's probably better than it's ever been.
I'm sure it's developing for its original purpose, which is, as far as I can see, I mean, I'm not the biggest specialist, but I can see, all the time that they're trying to actually do what it was supposed to be doing, which is actually allow, peer-to-peer type of transfers. So that process is developing. There was one guy saying you could do it in North Korea. And typically what you'll see is these kind of systems of payments are very important in places where there are capital controls, which are very heavy, or people are panicking and trying to get some money out. So there's a significant amount of demand for it. If I was sitting in Argentina, I'm sure, Bitcoins are doing magnificent at this point over there, for multiple reasons.
In Argentina, I guess they all have dollars, like physical dollars.
Well, they would love to, I'm sure, but they don't. That's a bit the issue. So there's, if you hold something else than dollars, you're somewhat in trouble. So you want to hold physical assets and the likes. So the Bitcoins will then offer some way to extract yourself out of that situation.
I guess they don't get hit by capital controls. You can't really capital control Bitcoin. So, but let's move on to why we are here. We have a couple of central banks out today, and I just got the email from your associate in London, Kit Jukes. I mean, he's been at work for a few hours and he's had time to write a little bit about this. And his headline is "Mario has lost his wand." symbolism and tokenism at the ECB. Is that a
It is
nice
a
summary?
man. Indeed. Yeah, the problem the ECB has is that it can't really do that much. It would love to do a lot, but it simply cannot. And what's allowed to happen is essentially it's allowed inflation to fall to a very low level, close to levels which are similar to what we saw in Japan. So you have a fairly high debt level within Eurozone, not very high, but a high debt level. Growth with through demographics, also debt load is going to stay very moderate. And then you allow your currency to be very expensive, as was the case for the Japanese yen. One of the main reasons behind it is you're a pretty darn good exporter, courtesy of Germany, but not only of them. And so the overall tendencies for the euro to stay relatively strong, and that itself adds to deflationary pressures. These deflationary pressures were very acute in the periphery. That forced them basically to cost cut, become more productive, and the adjustment has been considerable. I mean, I think people underestimate how much it has been. There's been significant amount of sanitization in terms of costs of the south. Though there are places still which are vulnerable. You can think about Slovenia. You can think about Italy in terms of manufacturing. You can look also a little bit north if you think about the broad Eurozone and think that there are still some vulnerabilities from Denmark to Finland and the likes where there's still significant production costs. It's not. It's unfortunately not as competitive. Then again, the offering is actually really good. So there are still points of vulnerability in the system. So we know that the satellites of the Eurozone move with the euro, and the euro is going to stay very expensive, and the ECB would probably definitely want to see the euro not overshoot from current levels and not see Japanese situation. So what can do? It can cut rates by 15 basis points. It's been argued by a few banks, which to be very clear, the ECB hasn't been very, very clear that it's able to go for negative interest rates, that it understands fully, all the mechanics of negative interest rates, knows its impact that it had on the reserves in Denmark, which was to reduce the amount of money going in and actually some outflows. So that tells them that it's negative for the euro. It knows the impact that it should have on money markets, and if you're comfortable with it, the duration has increased in different countries in Europe. And of course, moved away from ultra safe assets into less safe assets, so they offer higher yield. So no real major risk of significant outflows out of money markets. And it knows that generally speaking, it forces people to take risks. And that means they're going to end up buying more Italian bonds and more Spanish bonds and more credit, and therefore credit will start to flow in the ECB. Is 15 basis points or 10 basis points make a lot of difference in the universe? The answer is sadly not really. And on the euro dollar side, a lot of it is sadly already priced in. So hopefully they actually do something. It would be far, far more useful if they went for some kind of LTRO operation or try to talk down the currency. And that's where Kit is pointing out that it's not the decision that matters so much. It's really ultimately what Mr. Draghi is going to say, because words matter. Words matter, particularly in a situation of deep instability. We saw how they had to, in the past, had to put a lot of money in to try to shift the equilibrium in the yen, and managed successfully to do it. The ECB can do it with far less money.
Yeah. And the chart I'm showing you now is starting from the whatever it takes speech. And it's, Mario Draghi, if you look at this this chart you're seeing here, Mario Draghi can actually influence the currency quite a bit just by talking. And that exact point where if you zoom a little out on this chart, you see that this exact point here, this exact bottom, is when he said whatever it takes. And that's kind of unusual for central bankers to have that much power over a currency just by speaking.
Well, that's one. It's a property of unstable systems. So if you would put a glass of water and put it on the edge of your table, very close to it, there is a certain point whereby it can go either way, stay on the table or basically crash down on the floor. At that precise point, the ability to blow on it basically will change completely the equilibrium. So it takes very little force to move what is called animal spirits in the right direction. And the market generally loves to follow central bank because the central bank has, one, credibility, number two, has some of the tools behind it to be able to achieve what it says. And so at points of deep instability, central bank can do a magnificent amount of work. The problem in the case of Japan is that they had credibility issues in very large scale. Therefore, it took a lot of power to move that equilibrium. But in the case of the Eurozone, we were very successful. If you look at the way credit has performed in Europe, and particularly in the periphery, they've been massively successful, and that these gains will be seen in the months and years to come. What they need to do is more of it, in one way or another, and they have limited abilities to do so, but they probably will find a way to do so. Draghi's in the same school as the Bernankes of the world. They all come from the same place, and these people are very smart, adaptive, and innovative people. Their only issue is not really figuring out a solution. Their issue is a political one. Essentially, Germany and the core of Europe must accept very low interest rates for a very long amount of time, as well as the potential for housing bubbles, which we've seen in different places. Now, I'm long, housing in Germany, and therefore I'd say yes. But ultimately, what it means for the Bundesbank and other regulators in the north of Europe is they will have to tighten the regulatory screws and reduce credit going into housing to try to reduce some of these asset bubbles. This is something that apparently these guys are reluctant to do so. The Swiss have already done so, and Canada and the likes. And so that process of controlling different bits and pieces of the credit market, which is generally not a good sign, because it means that you're going off the ledge in terms of monetary policy, because your interest rates are just too low for these areas. Is one that we will probably see in the month to come. I'm actually quite surprised if we already haven't seen it. So of course with the Eurozone.
My main question, and I think a lot of people's main question, or two questions, the people who watch this. First, how do you trade a meeting like this? Can you trade? Can you do anything beforehand? That's number one. And number two is it possible that we're gonna get some kind of whatever it takes now? Because the previous whatever it takes came in a weak spot, but not in some kind of extremely weak spot. I mean, it was summer of 2012, so we had seen worse, but it was so earth moving at that moment, and seeing the bumblebee and all these like weird Draghi references, it's just how do you prepare for a risk like that? Because I know you're very, like, your reports are very trader savvy. You're very specific on how to play it. So how do you trade something like this?
What we proposed internally, but we didn't actually implement it, was to go short euro dollar. But our problem with that type of process in the past few days was that you can get a few pips, maybe 1% down in the likes as we price in the probability of that rate cut. It's fine. It's a great structural trade over the very long term. But if you think about what's going to happen 2 to 3 weeks down the road, you get that move lower in euro dollar, but it reverses very quickly. And the reason behind it is, unfortunately, FX is not the real business. It's fixed income. What's going to happen is, it means, if they do ease, I'd rather be long, front-end curves in the periphery and the likes, and try to take any yield that I can in Europe, because essentially they're trying to pump up assets. And that means more flows are going to go into the Eurozone. And in an era where people are very uncertain about where they should put their reserves and their assets and the likes, you'd rather be long assets in the Eurozone or in the US. In the Eurozone, you can have longer durations because you have far less risk, unfortunately, of rate hikes. So what it means is, I'd rather be long fixed income than to be short euro dollar. If I want, since I'm an FX guy, then I might try to be short euro dollar very tactically. And very strategically over the long term, but I would recognize the fact that it's going to be a very hard slog lower end, which has very little to do with the Eurozone. Will have everything to do with non-farm payroll. So if you look at non-farm payroll coming up on Friday, we probably will get a positive surprise. People have been slightly confused by the weather effects, and probably what's going to happen is we get a strong print. It's horrible weather in the U.S., and I say that knowing that you're in Norway, where the winter is really harsh, and I used to live in Quebec City, which
it's nothing
is far worse
compared to the U.S. It's nothing compared to the U.S. this year.
Exactly. So, but the problem is the guys here are not used to these things, and the economists are not used to these things, and therefore they're not that good at measuring it. And what was actually shocking in the case of Canada is that they actually managed to, not forecast it very well, whereas you would have expected that to happen in a place where there are often enough significant episodes related to very harsh winter conditions.
Yeah.
So if we do get that bump in the NFP on Friday, that means the dollar rises. So that makes it a bit more attractive to be short euro dollar. I prefer to be long dollar CAD on that and be short euro dollar. So it's not, it's not great dollar trading. It tells you want to buy dollar yen on the dip. Maybe we haven't reached the lows, unfortunately, on the case of dollar yen, but 99 for me is fair value, so you still head lower. But ahead of the non-fair apparel, you probably want to be long a bit of dollar yen. You want to be long dollar CAD, even though it's a risky proposal, but you can take the noise if you have enough P&L already accumulated and try to basically let that drift higher in the dollar push you in the next few months. And I think this is where the market feels more comfortable. It's not trading euro dollar. It likes European credit. It doesn't like to trade euro dollar. What it does like to trade is a long dollar story, because that's really the core trade of the market. And right now everything else is very secondary to it.
Yeah.
The other, of course, big element is the emerging market story, which then has an impact on euro and dollar.
Do you know what the market really hates? Stocks. Take a look at this chart that just came out from your rivals at Bank of America. I find it to be a staggering chart. This is a flow chart. I don't mean to spring it on you, but you're quite good. So this is rolling 1 week average flows to all equity funds.
I see that and I say buy. I mean, personally,
yeah,
I'd say buy.
Yeah.
But what happens in the beginning of the year is, one, you had a strong rally and therefore a hit. Then you have also tax-related issues, particularly in the U.S., which means that taking in your losses is probably a smart strategy. But we're still in an environment where things are meter reverting. That is, a lot of money floating around trying to find an opportunity set, and not a lot of credit crisis. There is one brewing in parts of emerging markets, but it's not one in the global world. Actually, the global world is doing better. The U.S. economy is drifting higher, and that means global growth is actually doing much better. The Eurozone is outperforming. It might not look like it, but it is outperforming. So you have major, large parts of the developed economies which are doing fairly decently, and the global economy is actually doing maybe not great, but actually doing quite well after many years of a crisis. So you have a move out of the yen into DM type of growth, and that doesn't tell me that the world is about to end, and therefore the strategy that typically survives in these environments are people who buy on significant dips. And I remember being with a client last week, and he essentially said, ultimately, when everybody panics, what the ones who are buying, and that's really what you do in a low yielding environment, is you take advantage until the credit story becomes too dangerous. And at one time you try to reduce everything.
Is this trade over? Dollar yen?
No.
Is the trend, over trade trend?
On the downside? No, the trend is very fine, because so 99 is fair value under Abenomics. That's at least what I could do, I guess a few months ago, when I could forecast, when I think we were in the 70s or mid 70s, and try to forecast where the fair value would be under the different arrow 1, 2, and 3 of Abenomics. Arrow 3 is not really measurable from an FX point of view. Arrow 1 and 2 could be, based on what they predicted, and that meant dollar yen would be a 99. So the overshoot of a 99 is kind of standard fare in the FX space. Yeah. And it's really also an expectation that yields in the US will move higher as the Fed eventually tightens. Now, the Fed is in the process of tightening, but it's very mild, but it will happen more and more in the coming years. So the upside trend in dollar yen is one that will most probably continue.
What do you think about what do you think about the general idea that Japan is, for lack of a better word, screwed? That they that like the long-term picture is just horrible.
Well, I think if they don't reform, the picture is going to look very difficult. But if you look what they've been achieving, the past few months is actually quite formidable. They moved from an era of somewhat depressed people to an era where people are not that depressed, and that has been basically by moving the equilibrium in the yen and trying to change the behavior of the people. Now, the more fundamental issues in Japan, from women working and immigration, which is severely lacking, and the likes, have not yet been really addressed, but they're trying to. And this is happening much faster than, let's say, in the Eurozone or even in the US.
Yeah, of course, but from different levels, though.
Well, they're starting, but that's the point. If you're starting from a very bad situation, it's very easy to improve it.
Yeah,
It's
like
much
China.
more difficult. I like to say that it's very easy to make bad things out of good things. It's a lot more difficult to make good things out of bad ones. But
Yeah,
it works out pretty nicely.
yeah. So, what are you going to be looking for in the notes that's coming out, or reaction? Is it price action you're wondering about, or?
Well, my big one is looking at the price reaction on non-farm payroll. Because if non-farm payroll does disappoint, you might actually get a catalyst for a far more significant correction than we've seen right now in the equity markets. I think right now the panic type of behavior, somewhat irrational part, is probably gone from the market. But if we do see that it was not a seasonal effect, but it was real, then the potential for a much more significant correction, and then a negative impact on the consumer and the households and their behavioral is in the U.S. is actually not to be underestimated. So the price action on the data release or just ahead of it and afterwards, not on the precise seconds because these are algorithms. There's no brains behind it. These are computers or chart trading. Is going to be a fascinating one. My presumption is we get a positive surprise. My presumption is that the world is still mean reverting, and that means people will buy assets which were depleted in the previous weeks and try to buy cheap things.
Yeah, it's a very interesting point because we had the ISM surprise and to the downside, and and the sell-off was just relentless. So it seems like people are looking for an excuse to sell after this weirdly good 2013.
Exactly. But if you look in the data, you'll see that the some of the sub data indicated that the labor market or the U.S. economy might be doing better than expected. A lot of it was seasonal effects. I think that's what was in the latest composite which was released. So I think people are starting to realize the trend is positive in the U.S. If you compare that to their northern neighbors in Canada, the different latest indicators show that things might be worse in Canada. The housing market might start is starting to correct. So there's starting to be very nice divergences in monetary policies and growth path globally, and these are very good opportunities for FX guys because they ultimately mean that the currencies will go in different directions. BOC will stay on hold for a lot longer than cut maybe at some point. Fed will be tightening. The ECB will stay on hold and possibly try to expand monetary policy as much as it can. And these are good, useful things that we can trade on.
Yeah. So do you have any? I know it's early. It's what, 6 o'clock at your time now. So I guess you get.
Probably, yeah.
Yeah. So you're late for work now.
I can leave about 6:20.
Jeez. Yeah, it's the New York lifestyle. It's why don't you guys just move to Europe?
Well, I'm building a house over there, so I can. I guess at some point I'll spend a week or two in Europe. But it's the fun part about working in FX. A lot of it happens in the morning, and I have a baby at home, so I tend to fall asleep anyway very early.
Yeah, but the whole city is up at 3, 4. It's
Well, it's funny. I had to take the bus. I think at 5 in the morning to go to New York, and there was a bunch of traders in it. So I didn't realize that actually a lot of traders even get up a lot earlier than I do. So,
yeah,
hat tip to these guys who are even more awake than I am. But you can send emails like at 5 or 5:30 in the morning, and you'll get ahead of a hedge fund somewhere in New York that's already picking it up. So
yeah,
it's pretty good stuff. You generally typically at this time when you say you do a radio show or something like that, and people are in their car, that's really when you get the maximum impact in
really.
in the New York area with professionals.
Yeah, that's a very interesting point. So speaking of professionals, before I let you go, do you have any what's the trade du jour or trade of the year, or what are people really talking about? Is it long EM equities, or is it I don't know, shorting the euro, or what kind of trades are people talking about?
I think until recently the trade was long dollar yen. You get some people getting very overexcited on dollar CAD, bearish CAD for quite a while, but it is an interesting trend. Long term, and we target 115 to 120 on dollar CAD. I guess by year end. There was a concern in emerging markets, which is then started to shift towards a very bearish view of emerging markets. And we had, I think, the central bank head in Kazakhstan mentioned that EM currencies essentially will need to devalue. And I would kind of agree with that broad point of view that EM has seen an overshoot over the last 20 to 30 years, which is linked to normal development of growth that's been accelerated by heavy FX interventions, and it means that their currencies and their local assets have essentially been significantly distorted. And they now need basically to reset the levels. So the EM story is a very interesting one, and attached to it are, of course, the commodity block, and a lot of the commodity block is already corrected. So that would include Norway, which smartly moved its currency lower. That would include Australia, which did the same, New Zealand, which has failed to do the same, Canada, which is trying to do the same. And so that process, has gone in different directions at different speeds, but I think is one of the more core themes going forward in the FX market. And sadly speaking, even if FX is far more attractive than it used to be, it's not until we get serious, differentials in terms of tightening of policies, so front end tightening behavior, that we're going to see like really standing carry trades go through the system. The rest of the business is mostly fixed income and equities rather than FX.
That's incredibly interesting, and it was lovely to have you on. And I hope you can do this maybe once a week, and we can sit down and just chat. Because I didn't have to prepare a second for this. I just know that you're gonna nail it, and it's really good.
Thank you so much.
Okay, so probably maybe next week, probably same time, 4 o'clock your time or something like that.
5:20.
Thanks so much, Sebastian.
Thank you so much.
Okay, cheers. Bye.
Cheers, mate.